because it's a mug's game trying to identify what the markets could do. I'm not saying you guys do that, Vikas. It's a job compulsion to give out targets. So you're, of course, doing it very well over a 12-month period. But I mean, over a 15 or a 30-day period, I would presume it's a bit of a mug's game to try and do that. My question, though, is what might be a lot more informed opinion from you for us would be, what is it that you reckon could happen to flows? And what is it that you're gauging from your clients about flows into India now that the easing cycle has started? Is there a one-to-one correlation between an easing cycle and flows into India? And if not, what are the nuances this time around for inflows into India?
I think that's a very relevant question, more so in the last quarter of this calendar year. Those flows will be very important because we get into, I would say, a pretty big period of supply coming in equity markets as well. So that's where more FII inflows will be required. However, can that be taken for granted? We do not know. See, if there is a rate cut and this narrative of soft landing continues, then we can be hopeful of more inflows into EM market. However, if this narrative of soft landing comes under a bit of doubt, even under a rate cut, an investor sitting in the developed world would not feel comfortable putting money in a more risky asset class. That's how they would view emerging markets as. Then there will be no such major incremental inflows. Why those two scenarios are very, very important is to add to all of this, what makes this whole cocktail even more interesting is what China has been doing over the last few days. Although I have to say, whatever feedback I've been getting with my global colleagues, they believe in the action taken by the Chinese authorities in terms of being able to cause a more sustainable rally is still very low. However, if there is a rally in the Chinese markets and we do not see a lot of incremental inflows coming into EMs, then there's going to be allocation away from India just to chase that rally, because it's become a consensus underweight China. So that's the other thing that we need to kind of bear in mind. To bring all of this to make more sense to what is happening closer home in India, we head into a period where there's going to be a big race in terms of supply that we will see for this quarter, if you were to believe many of these media reports and many of these upcoming IPOs and other fundraisers, if they were to be successful. I think the number that we are looking at is about $7 billion of total IPO that has been raised, only IPOs, so far in the first 9 months of this calendar year. The number that could come in could be much more than that in the last 3 months itself. So there is definitely a requirement of more inflows into India, because if that does not happen, then a lot of the foreigners who are interested in these IPOs may simply sell out of the secondary market and invest there. So clearly that could cause some nervousness in the already listed secondary market space. So in fact, like for example, last month, the month of August, where we saw a pretty big increase in weight of India. Despite that, the total FII inflow was only about a little over $1 billion in that month. Now, where that came from, there was a very big buying by non-India dedicated passive money that came into India, but a large part of that buying was from non-India dedicated active sellers. In fact, although there was over $1 billion of inflow in the month of August, more than that went into the primary market. So secondary market actually saw a small outflow for foreigners. So that is where I think getting this incremental flows from an FII flow perspective will be even more important than any of the last few months, because we are likely to see a very big, supply coming, very, very big demand for new IPOs coming into the market in the last quarter.